Welcome back to Morning Trade Live. The smile is for you, not for this market, because we're seeing the Dow down about 700 points this morning. It's time for Chartmaster. Jenny Horne takes us through the fundamentals, and Kevin Green will take us through the technicals, looking at some of the charts and three key names. So we'll start off with Vistra. Some analyst calls there lately. Let's see what Jenny has to say. Jenny?
Yeah, and today not seeing it as maybe a downbeat of a move. Actually, it's pretty much on par with the overall markets now. Trying to find some optimism on this gloomy Friday, but Vistra has been a really stellar performer. I mean, consistently. Well, we have come well off highs by about 14 or so percent. I will say that we still remain up about 94% over the last 12 months. So, yeah, definitely making a pretty nice recovery, starting to see some consistent movement to the upside. Raymond James also with another vote of confidence today, as we did see a strong buy rating and a $216 price target. Historically, they said the company has benefited from elevated power prices, and they do believe they're well positioned now for an upcycle. Additionally, they do see their improving regulatory backdrop with the Senate Bill 6 passed, which could unlock a data center PPA at Comicon Park soon. And they do also highlight the fact that this has been a company that's prioritized its buybacks, repurchasing nearly 1/3 of its shares since about 2021. So yeah, Vistra has been, I mean, all of these names that, are right now these favorable energy resources, at least from the Trump administration's perspective, I think have been seen as leaders. And again, we saw some fallout really after some of its last 2 quarters ago was when we saw some substantial selling on the back of its earnings. But all things considered, again, I know we're off of highs, but this name had gone pretty parabolic. So we've started to recover. And I think a more gradual uptrend is one that's being appreciated now in these companies that just, again, were truly nuclear a bit to the upside, then took a bit of a pause.
Okay, thank you for that. I mean, when we see the price target of 216, it's at 171 today. Let's take a look at the chart, Kevin.
Obviously, this name has seen some positive price performance over the last year, but we have seen maybe a little bit of cooling off when it comes to the technicals, just to say the least. Now, obviously, last year we saw a little bit of a consolidation before breaking higher on this nuclear theme that has been taking place here. And we started seeing this expanded type of megaphone pattern, just showing the fact that we have a fair amount of volatility when it comes to price, but it was actually in an uptrend until we saw a breakdown back in February. Now, that also coincided with the broader equity market. We went below that 20-day moving average, tested the 200-day moving average before breaking. We saw a little bit of a consolidation, and then we have broken above that 200-day moving average, leveraging the 20-day moving average as an area of support right now. Now, we do have a gap that's still open between 178 and 188, so that's something to be mindful of. And we do have a nice ascending channel that's taking place here. But any type of breakdown of that channel line, as well as a breakdown of that 20-day moving average, you start looking at that 200-day moving average once again at around $136. RSI is actually looking like it's breaking a bit lower, losing a little bit of momentum when it comes to price action. And MACD has created a bearish cross here, that 12 EMA below the 26 EMA. Obviously, we're near the highs, so the trend's your friend to the upside. But if we do see any type of break, you probably will see a significant correction in price going back to those key levels that I just highlighted.
Yeah, and it really has just been, thank you for all that, a little weakness there, or at least off on the RSI. But when we think about nuclear and Vistra stock in particular, what a great run it's up. It's 1 year up 90%, outperforming some of the competitors. Jenny, let's turn our attention over to Darden Restaurants, getting an upgrade today.
Yeah, and this name also, I was trying to find some optimism here because this name is a lot closer to its highs. We're about 2% from recent highs, which was around $220.79 a share, while also being off the lows by almost 60%. So, I mean, this has been a thing of technical beauty, especially in a restaurant space that has been so challenged by prices, inflationary concerns, sourcing of products, and also labor right now seems to be a consistent theme where it feels like we are seeing restaurants and just overall these various chains that employ, mass amounts of people that are seeing a difficult time finding and keeping employees. I think that's also been something of note. But Darden has been able to excel so well, of course, operating under its various brands, Olive Garden being a huge bulk of its overall revenue. And they've been able to keep their prices relatively low, while the average cost of a meal has gone up over the past couple of years. We're talking like $1 or $2. Right now, the average bill is $22, which, as we know living in major cities, that just feels impossible to me to dine out and be able to spend $22 a person. But that's their average plate size right now for Olive Garden. So that affordability element, I think, has really, really resonated well with consumers and now the street. So Jefferies today upgrading shares to hold from underperform. Price target up pretty substantially to 210 from 165. I will note, though, that it is below where we are currently trading at around 216, but saying that they become increasingly positive on Darden's ability to return to its core Olive Garden brand to this everyday affordable price leadership in casual dining and also compete more effectively for traffic now going forward. They did also, highlight the fact that this name has also given overall continuous strength as far as its quarterly updates, which is definitely of note. And they also said their valuation is still a bit rich, but the improvements they've made at Olive Garden merit this upgrade. So while still in the hold camp, they're at least turning away from more of that bearish way of thinking. This name does trade at a forward PE of around 21 times, which I know is expensive, yes, in the restaurant space, but in the discretionary space, frankly, it's not. So yeah, a lofty multiple, but this name has grown and the price really speaks to that.
Yeah, without a doubt. There's worry about consumers, gloom and not, spending, but they are out there and showing some resiliency, that's for sure. What do you think here of the chart, Kevin?
Yeah, the chart's actually looking pretty good. Nice little uptrend over the last couple of months here, Nicole. If we actually look at the 1-year daily, last year we started seeing the stock really kind of consolidate and then break out and then consolidate again. And they would go in these periods or have these type of periods for about 2 to 3 months before breaking out higher. But now, pretty much ever since April, we have seen a nice little uptrend. You do have this type of channel that is going to be converging here, not so much right now, but probably towards the end of August. So that's something to be mindful of. Testing the upper end of resistance right now, that 20-day moving average acting as an area of support. Any type of breakdown below that, you're looking at the volume point of control here sitting at around $195 and then that 200-day moving average. But overall, this has been a really decent uptrend. RSI making higher lows, which is what you want to see if you're a bull in this name. The only thing that you have a little bit of a pause is because of that MACD, once again, hinging, looking like it's wants to cross in a bearish formation. We do have earnings on the 20th, so that will be a big driver for price advancing to the upside if what this analyst is kind of talking about really does come to fruition here. So overall, nice bullish trend.
All right, thank you for that. And last but not least, what about Sherwin-Williams? This was a darling for a while, but getting a downgrade this morning. Jenny?
Yeah, seeing, some pessimism, and I think a lot of it is tied to its valuation. It does trade at around 28 times, so it's forward earnings at least. So that implies, significant growth for a name that has not seen the same degree of outperformance as, say, like comparatively Darden. But Sherwin-Williams downgraded to neutral from a previous buy at Citi. They cited this continuous weakness in housing as a drag on the company's outlook. So they flagged this slower than expected rebound in housing activity, pointing to these persistent high interest rates, weak overall existing home sales, and ongoing challenges for home builders. These conditions, they said, are likely to weigh on demand for residential repainting, which of course is an important segment for Sherwin-Williams. They did also warn the stock could be especially vulnerable if there's any slowdown in repaint activity, trimming their price target to $385, down from $405, but still it implies, good upside from where we are currently trading, obviously at $342.56 a share. So all that to be said right now, I think the debate is, well, this company has seen best-in-class performance as far as its earnings. I saw many analyst notes that highlighted, hey, we loved their first quarter earnings, loved the business, but right now we're not so much a fan of the stock price. So seems to be the issue here. And again, a name that we don't look at as maybe often as like the rest of the home builder stocks, but I do think a great read here on like the overall trends we're still seeing persist in housing, as this has been still a challenge landscape. I know Home Depot, Lowe's came out and said, hey, we're not raising our prices. We're committed to keeping costs low. But all of these companies have faced, I think, slowdown in demand and the supply demand in housing that has seemingly not been the same DIY trend that's translated so well for a lot of these companies, Sherwin-Williams included. So we're still up on the year ever so modestly, about 1.25%, but we've also seen a a 12-month gain of about 14%, while also remaining well off of highs that were touched early. I mean, back we saw earlier this year, or excuse me, even towards the end of 2024, which were down about 14% from that level at around $400 a share. So it's been stuck in this range, and I'm sure Kevin will dive more into that. But looking like it's reading a lot similar to some of these home builder and really housing exposed stocks like Home Depot, Lowe's, and again, the home builders.
Yeah, and its largest percent decrease since October of 2024. You noted, I mean, it has been a great performer. 1 year, still up 16%. But, you know, when you have analysts no longer being bullish, maybe it's just gotten too expensive. The housing market has stalled in certain places. Meanwhile, Manhattan rents are at record highs, I read this morning. So those people will need some paint. Kevin, some of your thoughts.
Yeah, we have seen a nice run to the upside, but unfortunately, we have seen a decent little breakdown in the current technicals over the last couple of weeks and months here. But if we start at the left, last year we did see a nice little flagging pattern hitting that 200-day moving average. We had a really aggressive run up, which was actually outside of the norm when it comes to Sherwin-Williams. And then we started seeing a consolidation once we got closer to those highs, that consolidation between $350 to the downside and then to the upside sitting at around $395. And that's where we started seeing this breakdown, failure of that 20-day moving average. We have not been able to really hold that level ever since. We started seeing an area of resistance sitting at around $365, and we have not been able to break above that since pretty much January and sustain above that. And that's where we started seeing a problem, testing that 200-day moving average. We broke below it and started leveraging that as an area of resistance. We got to the apex of this triangle formation. If you take the lows, that was the primary trend of the upside. And then once again, that resistance at around $360. Now we're breaking below that. And unfortunately, we are off the lows for today, but we have this island candle. There is a gap that was still actually open between 336 and around 340. And so let's see if it's going to be able to test that level. If it does break below that, $330 is your next major area of support here. MACD in a bearish formation. This chart does not look that great, Nicole. It looks like it probably looks like more of a downside move to come over the next couple of weeks than a reversal from here.
Well, that's valuable information right there. Kevin Green, Jenny Horne, thank you both so very much. A good look at three key names here in Chartmaster.